Hi everyone, I'm Karan and welcome to Karan's Gyan. The news on focus for today is by Jim Rogers, and Jim Rogers is a investment guru and the author of the book called Street Smarts. And Jim Rogers says there'll soon be a blow up in US and possibly Japanese markets. This news is in line with the news I posted earlier today, in which Credit Suisse gave a downgrade rating or an underperform rating to Indian equities and Japanese equities. So, a prominent investment guru and a big bank saying that there is a blow up to be seen in equity markets in both US and Japanese markets. It's something to be considered. You might agree with them or you might disagree with them, but you should hear their opinion and maybe try to decipher something from what they're trying to tell you. Okay, moving on to the news. He says that Trump is willing to spend as much money as he can in order to get re-elected. As you know, it is an election year in the US, and November is when US presidency elections would happen. And this is what he's talking about. He says, "What is happening to the world? Everybody is simply trying to use the word liquidity." When I asked experts why the markets are going up, and the experts simply answer by saying, "Well, it's liquidity. It is it is Fed and it's their money." So what he says is the Fed money is pouring all over to the markets. So Fed is the Federal Reserve of America, the Federal Reserve of United States of America, and Federal Reserve is responsible for printing US dollars. So what he's saying that the Federal Reserve of United States of America is using it's printing US dollars and pumping it into the markets in the United States of America, and that can be something to worry. He says the main thing that is going on in the world is that central banks all over the world are printing huge amounts of money, and governments are borrowing and spending huge amounts of money. He says every day the Bank of Japan goes in there and starts printing money as fast as it can and buys stocks, ETFs, and bonds. By going in there means it goes into their Federal Reserve. So Bank of Japan, who is responsible for printing yen, goes in, prints as much yen it can, and buys stocks, ETF, and bonds. And this is the reason why the stock markets around the world are going up. About somewhat the same is happening all over the world. In the US, they are not buying stocks, which he certainly doesn't know. But US is buying everything. So what he says that may or may not buying stocks, but they are buying bonds, other assets, and this is insane. Which I agree to. This is insane. You're using money that you have printed and money which is artificially generated into to pump it into the system, and too much liquidity can be bad. He says, but it's great for investors, isn't it? It's great for stockholders and it's great for ET Now. ET Now is Economic Times Now, and it's a newspaper that has written it. So he's saying this is the news for Economic Times Now, and as a result, it's good for investors, stockbrokers, and the media that is reporting it, the Economic Times Now. Okay. He says, so if global central bankers are likely to print more money and if interest rates are likely to remain low, then what could be the end game for equities and for this so-called summer madness which we have seen in about every classes? So basically he's calling this buying spree a madness. Since this is happening in summer, he's calling it madness. He's saying what can come out of this game with low interest rates and low interest rates and money, and the printing machine is roaring like an engine. How can this game end? He is pretty much pessimist, being a pessimist here, and he's saying this game won't end well. First, you remember that in America, it's election year. November is the election month where US presidency election would happen, and the Washington would do anything to get re-elected. They don't care about us, and they don't care about our children. This is pretty much the same in India. Modi doesn't care about us and our children. They just want to get re-elected. So until November, this is all going to continue. but other places will probably follow too. So he's saying this engine would keep on continuing till November. So till November, expect stock market to be roaring. Stock market would make new highs. This is what he's trying to say, because it's election year and Trump would print as much money as he wants to in order to uh, show as if the stock market is going up. And since people connect stock market to how well the economy is doing, people would believe that, well, if the stock market is going on, of course the economy would be doing great. And they don't understand this Trump who's printing money and pouring it into the stock markets and other asset classes in the country and shooting the price artificially up. So he says this end game won't end well. So he says after a long rise in the market, it turns a blow up bubble. So like a bubble burst, this rise would burst, especially when huge amounts of money come in. Just like liquidity is pouring in like crazy, there's suddenly gonna be a bad day and this bubble would burst. So, to your mind, what is the importance of this year's presidential election? So, this again he talks about election year, and this again he talks about the second wave of coronavirus. Well, this is not important to us since you're talking about stock market. And we just need to consider the opinion of Jim Rogers. He's saying that because of liquidity, share market is artificially going up. Different asset classes are artificially going up, and there's buying across the board. This doesn't even apply to US or Japan. It applies to India as well. And Indian investors need to be cautious and should book profits whenever they can, because these are turbulent times, and you should be spooked. And I'm sorry to use this word of being spooked, but it is how it is, and desperate times call for desperate measures. And this, of course, is a desperate time, and investors should keep this thing in mind. Okay, now let us look at stock markets around the world. So, as you can see, Nasdaq is down 1.3%, 1.4%. British markets are down about 3%. French market is down. German market is down another about 3%. European markets are down. American market is down. Asian markets are down. Like the Credit Suisse report said, Singapore would be doing badly, and Japan would be doing badly. But Japan is almost flat. Hong Kong is again almost flat, about half a point down, half a percentage down. Taiwan is doing well. Credit Suisse said that Taiwan is a hardware related economy, and since hardware demand is always high, Taiwan is supposed to do well. South Korea is also doing pretty much fine, about 1.5% up. Jakarta, Indonesia is 2% up, and Shanghai is about 0.3% up. Thai market is about 1.7% down. So this is pretty much it about the foreign markets, and I hope you guys consider this news and maybe reflect on it. If not, act on it. Alright guys, this is it for today, and I hope you like this video.